one line across your chart, right? This is the previous day high from Friday, the 26th of April. So you just want to draw a line like this, and you want to label that line previous day high, right? PDH, right? Previous day high. Now, the previous day high is essentially what you are waiting for. So when price takes out the previous day high, this you can rest assured is a high or a higher probability manipulation. So what you're looking for firstly is your Asian range. The Asian range is an accumulation, right? This is an accumulation of liquidity. We often use it for targets and for our phase one and phase two manipulations, right? To quickly go over this, our phase one manipulation typically occurs of the Asian range low. So when price takes out the Asian range low and then price takes out the Asian range high in line with a previous day high liquidity sweep, this is my A plus setup, because what's happening is price has taken out the Asian range low. Sellers have been enticed, and now we see those sellers being stopped out, and buyers are being enticed. If you can understand Asian range liquidity and previous day high liquidity, your trade setups in terms of your points of interest, your fair value gaps, your breakers, whatever ICT concept you use, it becomes a lot more powerful if you use a simple concept of liquidity. Now, that being said, let's continue to play price on and see what we get. So we end up taking out, price ends up taking out the previous day high, and we have a very, very large manipulation move over here. Now, this is where things become very interesting. We can head down to the lower time frames at this stage. So if you're struggling as a trader, I want you to remember a couple of things. Remember, only go down to the lower time frames after price has taken out some kind of major liquidity. In this video, we're going to be focusing on the previous day high, because what happens with manipulations is you want to see price come up, take out some liquidity before breaking structure to the downside, right? This here is a previous day high manipulation. So I want traders to understand an ICT Judas swing is just a sweep of the previous day high. Now for me, we go down to the 5-minute time frame. Now on the 5-minute time frame, there's a couple of things I look for after our initial liquidity sweep, right? So let's first get that here. Now, once you've had a liquidity sweep, what you are looking for now is you're looking for a 5-minute imbalance, right? And you're looking for a 5-minute imbalance that's above the 10 a.m. Eastern. So this is where the power of 3 becomes very, very important. So what's happening is if we just kind of draw a little schematic over here, we see price heading higher. We see price heading higher, taking out liquidity, breaking structure, and now we have a fair value gap over here, right? So we have a 5-minute fair value gap. So I'm just going to label that in blue. So this is the 5-minute imbalance over here. Right, let's label that in blue. What does an imbalance tell you? Well, an imbalance tells you that the price action has delivered in an unfair fashion. There's an imbalance between the total number of buyers and sellers at this key level. Now, notice how I use the word key level. All of my trades are at key levels, and I often get questions every single day. How do I form my supply zones? How do I form my demand zones? How do I know where to trade from and where those high probability trades will come? Well, it's